Hello and welcome back to our YouTube channel. I wanted to do a video very quickly on something that maybe is a bit misunderstood, something that is a bit maybe esoteric for some. But I wanted to just read this article and provide a few comments because I really found it quite interesting. So here we go. CME CEO Duffy says new perpetual futures could be disaster waiting to happen, by Brian Danga. So the CME CEO Terry Duffy said newly approved perpetual futures could be a disaster waiting to happen, citing retail speculation and concerns over high leverage trading models. So here you go. The chief executive of the world's largest future exchange issued a broad rejection of the first U.S. approved perpetual futures contracts on Thursday, warning that the products could expose retail traders to elevated leverage compared to CME listed markets. So Terry Duffy, chairman and CEO of CME Group, said at the Piper Sandler Global Exchange and Fintech conference that perpetual futures in some offshore markets trade with leverage ranging from 20x to as high as 250x, compared with CME's roughly 5x framework on crypto products. Quote, I have grave concerns with the way these contracts are set up, unquote, Duffy said at the conference. I don't like to see people that don't understand products to potentially get blown out of a contract that they shouldn't be in the first place. Duffy compared current market behavior to conditions ahead of the 2008 financial crisis. I really believe it's 2007, he said. The housing market has been supplanted by the speculation market, including predictions and everything else, and this could be a disaster waiting to happen. CFTC approval. So Duffy's remarks came days after the Commodity Futures Trading Commission approved the first perpetual futures contract tied to cryptocurrency prices. Kalshi, a prediction market platform, listed the contracts on May 29th. So perpetual futures allow traders to take leveraged positions on an asset's price without an expiration date, unlike traditional futures which settle on a defined maturity. Offshore venues dominate global perpetual trading activity. Hyperliquid accounted for 6.6% of monthly perpetual volume in May, according to data from the block. HIP-3, its builder-deployed perpetual framework, generated more than $62 billion in volume last month. So CME Group and Intercontinental Exchange previously urged the CFTC to examine offshore perpetual futures markets as the structure gained traction outside traditional exchanges. Several U.S. exchanges have also explored launching similar products. Duffy also criticized the CFTC's approval process, saying he disagreed with the agency's decision to permit the contracts. He said the review concluded in less time than a standard self-certification window, which allows listing after 24 hours absent objections. I totally disagree with the government, and I'll deal with it as we need to move forward, Duffy said at the conference. In a separate interview, Duffy said he contacted CFTC Chair Michael Seelig on the day of the approval to express concern, Bloomberg reported. All right. So the main point of this article, which I found quite interesting, is really the retail exposure, which he mentioned right away, and also the fact that there's this dynamic between what would be domestic versus what is offshore. So as you see here, that perpetual futures in some offshore markets trade with leverage ranging from 20x to as high as 250x, which is really quite high compared with the CME's more conservative 5x framework on crypto products. So that is actually quite docile, right? That's quite low when you compare. So actually, the argument that's being made here is that by bringing it onshore, we've covered this on the previous video. Actually, you can really mitigate some of the risk. You're protecting the end user, the retail user. So in this regard, there is a lot of common ground to be found with what Duffy is saying, and quite proactive. So as soon as it was approved on the 29th of May, Duffy himself contacted CFTC Chair Michael Seelig to express concern. So only time will tell in the bigger picture when Duffy is basically equating 2026 to 2007 and equating the housing market and finding similarities and all these similar predecessors to the what he's alluding to is a crisis on the horizon. This is also up for debate. So everybody's going to have their opinion. Only time will tell. But perhaps just focus on what is front and center here, which is trying to get the right authorities and the right jurisdiction to regulate or at least allow the hosting of these markets. Okay, so perpetual futures, something that CME's Duffy doesn't like, but only we will see in the near future how because it's really just less than a few weeks old, how the markets begin to be taken up. So with that being said, let us wrap up this video. Thanks again for everybody for joining us on this video, brought to you by all of us here at cryptodeposit.org. So for stablecoin, for yield, for so many other options such as depositing, stables, holdings, borrowing and lending protocol, OTC, so many great tech stacks. Please feel free to reach out on the YouTube channel or at info@cryptodeposit.org, and our team will get back to you, focusing on family offices, focusing on B2B, and as well as retail. And once again, thanks everybody for your time and attention. No obligation to subscribe or all those things, but please try to share our information with those in your network who are familiar with fixed income and who are familiar with stable coins. We believe we have an unmatched ecosystem over here and would love to expand our network of partnerships. Okay, folks, have a good day and talk again on the next video. See you soon.